What's up? What's up? What's up? My mind your money business folks. Hold on one second. All right, I'm back. Just needed a little more light. You know, getting maybe that's too dark. I don't know. Either way, you can see me. Whether it be perfect or not, you can see me, right? All right. So the stock market today is doing good. You know, stocks ticked higher as the S&P 500 eyes a fresh record. And I'm also going to be talking about dollar cost averaging at the end of my stock market review today, right? Because that's important. You know, that's good information to know for us new investors and also for those of us that are, um, that have been investing for quite a while now. I mean, you know this to be true if you are consistent within the stock market. Dollar cost averaging is the best way to invest because there's no perfect way to time the market. Hold on again. I need my water. Quite a few interruptions. But again, today, we're minding our money business because this is where we learn to tell our money where to go each month instead of trying to figure out where it went. So let's get into it. So, US stocks were mixed on Tuesday as investors digested China's launch of aggressive stimulus that lifted market spirits and a weaker than expected reading on consumer confidence. Now, it's interesting that they mentioned China. You see how things around the world affects the U.S. stock market, and also the U.S. stock market affects other markets within other countries. You know, that's very important to know. Okay, the tech-heavy Nasdaq Composite rose about 0.5%, while the S&P 500 up about 0.2%, building on the latest record close. Meanwhile, the Dow Jones Industrial Average slid just below the flat line. Okay, stocks declined around 10 a.m. Eastern Standard Time before recovering losses following the latest consumer confidence index reading. So the consumer index reading came out, and so that inspired the market. And it says here that the U.S. consumer confidence fell in September. So there was an article posted today that the consumer confidence index fell in September to 98.7 from the upward revised 105.6 in August. So I guess that's a good thing. Like I've never heard of this report before, but it says consumer confidence weakened as consumers worry about jobs. It says consumer confidence dropped in September to near bottom of the narrow range that has prevailed over the past 2 years, said Dana Peterson, chief economist at the Conference Board. September's decline was the largest since August 2021. Okay. Yeah, this article, this thing is, well, the post on the consumer confidence, it's on, I found it on the PR Newswire website. I'm not familiar with this, but let me see. Is there anything else? But either way, what Yahoo is saying that the stock market was down around 10 o'clock a.m., but then it rose after the before recovering losses before the confidence index reading came out. And then, like I just read from the PR Newswire website, it said the Conference Board index fell. So I guess it falling is a good thing to 98.7 in September, below 105.6 seen in August, and lower than what the 104 economists surveyed by Bloomberg expected. Okay, stocks have shown momentum as the prospect of a Federal Reserve interest rate cutting campaign and an apparent resilient economy spurs confidence in a coming rally. Some of the Wall Street now forecast the S&P 500 will hit 6,000 this year. Damn. That's pretty high. I think right now the S&P 500 is at like 5,700. A big milestone less than 5% away. I'm telling you, if you guys are not investing, or if you haven't started investing, you're missing out on significant gains on the stock market. Again, I remember they said in the past, if you wanted to hide information from people, put it in books. Now because of the internet, there's a lot of information being placed, not just in books, but in these news reports and in these consumer reports and in these articles that people are not reading. However, they're looking at the news, following what's being put out on the news about politics, religion, entertainment. They know everything about that, but they know nothing about the stock market and how to make money in their sleep by investing into these paper assets, right? Because you have to create a plan one day, people, because you cannot work forever. If you don't own a business and you're creating the foundation for yourself, if you are working a 9-to-5 job, what is your plan? What type of foundation are you setting or creating? When do you plan on stop working? And when you stop working, how do you plan to maintain your lifestyle? What type of lifestyle are you willing or trying to maintain? Is it a simple one where you don't require or need much? Are you planning to live off the grid? Do you plan to continue going on cruises 2 or 3 times a year, trips? If you're planning to do a lot in retirement, how are you going to finance it? Hopefully not with credit card. You should be thinking about being able to do those things by investing into paper assets within the stock market that can help you maintain your lifestyle. Okay, the Fed's jumbo rate cut last week, which was 50 basis points, right? Kicked off the rally. On Monday, several policymakers hinted the door is open for more big moves because remember, the Feds are meeting again in November and December, and there talks about maybe another 25 basis point cut in November. Well, not another, but a 25 basis point cut in November and a 25 basis point cut in December, which will be a 50 basis point by the end of the year, plus the 50 basis point that we were just given. So that's 100 basis point, meaning 1% drop in interest rates. Again, the lower the interest rates, the more these growth stocks are going to grow because companies are going to be able to borrow money at a cheaper rate to invest into its company's growth. That's going to make its shareholders more money. You as consumers will also be buying these products, making us shareholders more money. You will be able to purchase things like homes, cars, etc., at a lower interest rate, boosting the economy because that's what we do. Right? That's why you need to ensure that you're making the most out of the money that you're making and also utilizing it the right way. Make your money work for you. Mind your money business, people. Mind it. Do it while you're able and young and you have the energy to do the right thing. Okay, on Tuesday, Fed Governor Michelle Bowman explained she dissented to last week's percentage point interest rate cut because upward risk to inflation remain prominent. Yeah. Oh, and also I need to put out this disclaimer. I am not a financial investor. I'm just providing my input, views, and opinions on the stock market. If you need financial, advice, we can talk, but I will highly suggest you talk to a financial advisor or planner, a professional that can help you invest in the right stocks. Or if you do as I do, you go out, you do your own research, you create your own online brokerage account, which you can do the same with Webull, E-Trade, Charles Schwab, Robinhood. You can create your own online brokerage account and you can invest your own money. However, if you're not confident in doing so, I would advise you to contact a professional and have them do it on your behalf, right? but you need to start investing. It's not as hard as it seems or appears to be. The only reason why it may sound or seem complicated is because this is not something that you're taught. We're taught English, math, social studies, science, you know, uh, all those things that have been, told to us is important. But investing your money is just as important. We're not taught that. And then when we hear and learn about it at a later age in life, we think that it's something that is uncomprehendable, um, unexplainable. It's not that hard, people. You can take $100 a month and just buy a stock or buy an index fund. Just keep doing that every month. Do it for 20, 30 years. In yesterday's video, I gave you guys examples. I ran some numbers on how you could utilize future value calculators at investing a certain amount of money each year and over a certain number of years. It will tell you how much money you can expect to receive, because I even found out yesterday that over the last 100 years, the S&P 500 has provided at least a 628% return on average. On average, people, over the last 100 years, people have gotten at least 10% returns on their money. You're not getting that from your bank. The stock market was created for the rich, by the rich, to continue to gain riches. We're a little bit behind, but there's still money to be made. And there's nothing that can stop you from making money within the stock market when you invest into good growth stocks or index funds, mutual funds, the right funds, and you too can make those type of gains. No one's going to stop you from doing so. The only person or people that will stop you is you. And like I said, the stock market on average has brought back 10%, over 10% over the last 100 years, right? But every other year it can fluctuate. It can bring back 10% this year, 20% the next year, 25%. The year after that, 15%. It fluctuates, but on average, 10%. And as of today, the S&P 500 year to date, from January up until now, September 24th, 21.07% as of today. So that should tell you something. And if that doesn't make you invest, I don't know what will. But the choice is yours. Just don't ask me to borrow any money. Okay, also boosting the mood was China's launch of a raft of stimulus measures, its biggest since the pandemic. Global stocks and oil rallied after PBOC's move to revive a slowing economy and support markets. What is this? PBOC? Because it just has the acronym in the article. PBOC. What is PBOC? Okay, so the PBOC implements its daily open market operations, where it offers commercial banks money, banks, at a fixed rate using reverse repurchase contracts, repos, usually at the 7-day tenor. Interesting. You see, people, there is so much that plays into this money-making system. You have to understand it. And here's the thing, but then again, you really don't have to understand it. Just invest your money or have a professional invest your money. Again, when you invest in your money, I highly suggest you not invest your money just in an individual stock, because if that stock or company goes down, so does your money. Your money, you lose it as well. The smartest way to invest your money, if you're unsure about the stock market and what you're doing, invest in a index fund, an exchange traded fund, mutual fund. The best ones, the S&P 500. There are many different S&P 500 ETF, mutual funds, index funds that you can purchase through Vanguard. I've talked about VOO, but I purchased SPLG, which is exactly the same as VOO. VOO is over $500 a share, and SPLG, which is exactly the same, just closed today at 67.19 $7.19, right? There's nothing wrong with SPLG. It's just that VOO is a more popular stock. Like more people would prefer to buy Nike shoe than say Fila, right? It's just the brand name, but they do exactly the same. The shoes are the same. Well, shoes are the same. Is that a good analogy? Either way, I think you understand what I'm saying. Like today, VOO closed at $526.74, right? Year to date's return on VOO, 21% returns year to date. And VOO is Vanguard's S&P 500 ETF. It's more popular. It has more money in assets, $1.24 trillion. Now, when I click on SPLG, when you utilize the internet the proper way, there's a lot that you can learn when you're wanting to learn. You have to want to learn in order to learn the information that you need in order to prosper in life, right? So either way, and so SPLG is the SPDR portfolio S&P 500 ETF. They're both S&P 500 ETFs. SPLG closed at $67.19. Year-to-date return, 21%. For me, as an investor, I can buy more shares of SPLG than I can of VOO, which is $500. $500, $67. You do the math, right? So yeah. So either way, I'm at the end of this article. Okay, on the corporate front, plain market Boeing took what it called a best and final offer directly to striking factory workers after their union balked at putting it to a vote. So I think Boeing workers are on strike, right? You know, I think I have a Facebook friend that was talking about, yeah, Boeing's on strike. Damn, poor Boeing. You know, I almost bought Boeing stock a couple of years ago, but I didn't buy it. But either way, here nor there. That's the stock market review. Invest, people. Invest, invest, invest. So now I want to give a quick rundown on dollar cost averaging. What is dollar cost averaging when it comes to investing, people? What is it? You know, pretty much investing set amounts at regular intervals over time, also known as dollar cost averaging, can help you manage timing, risk, and stick to your long-term plan. Again, you need to create a plan. Do you have a long-term plan or a short-term plan? You need to have a plan for anything and everything when you're trying to make an important decision. Like retirement is something that if you are a working individual, you need to be thinking about retirement. What are you planning for retirement? It doesn't matter if you're 20 years old, you will have to retire one day. So it's best to create a plan and start executing that plan at an early age than, waiting until, the year before retirement to think about this. So it says investing set amounts at regular intervals over time, also known as dollar cost averaging, can help you manage timing risk and stick to your long-term plan. Yeah. So when is the best time to invest? To answer this age-old investing question is deceptively simple. When prices are low. Yeah, that's the best time to invest, when prices are low. And right now, prices are low. Like that VOO ETF, S&P 500 ETF, was not always $500. That's why it had $1.26 trillion in assets. I guarantee you there have been people that have been invested in VOO for 20, 30, 40, 50 years. And some of those people have since passed on, and they created trusts, I almost said warrants. I mean, not warrants, but wills. They created things where they pass it on to their family members. They passed on this generational wealth. You can create some type of trust to where, hey, you can't take out all this money. It has to be managed. It has to stay in there. There's so many things you can do to your trust. Look into it, right? But so the best time to invest is when prices are low. and prices are currently low right now. Will the prices be the same next year, 2 years from now, 3 years from now? Probably not. Like I said, the rich created the stock market for themselves to make more money. So as prices go up, because they're selling products to you, Tesla is selling its cars to you. Tesla's creating Megatron. There's their space events, all this stuff. They're creating products for people to buy into. And as you, the consumer, buy into these products, those of us that are invested in Tesla, we're raking in the benefits of your purchases and your interest in the company. The same with Nike, Johnson and Johnson, Starbucks, Walmart. We are investors. I'm investors into those companies. And as you buy those products, you're making the company money and its shareholders like myself and you money, right? But however, trying to time the market, waiting for the best time to buy or sell an investment is extremely difficult. Like there is no specific time you should invest. You cannot time the market. You can't say, okay, I'm going to get in the market when stock prices go lower. You're going to miss out. You should already be in the market. You should be dollar cost averaging into the market every month, a certain amount of money every month in the market. You're going to buy into the market when stock prices are high. You're going to buy into the market when stock prices are low. You're going to dollar cost average in, right? Okay, fortunately, there's a time tested strategy that can help you buy more when prices are lower and less when prices are higher. It's called dollar cost averaging. So what is dollar cost averaging? Dollar cost averaging is the practice of investing a fixed dollar amount on a regular basis, regardless of the share price, regardless of the price of the stock, you're still going to buy it. It is a good way to develop a disciplined investing habit, be more efficient in how you invest, and potentially you lower your stress level as well as your cost. So true. Let's say you invest $100 every month. When the market is up, your $100 will buy fewer shares. But when the market is down, your money will buy more. And those of us that have been monitoring the stock market since August 5th, just throughout the years, but especially August 5th when they called it Black Monday, the market really took a dip. Share prices fell. Even when companies were giving good earnings report, the stock market still fell. Prices, again, were down. And a lot of people probably pulled their money out of the stock market, but not me. I actually bought more shares when the prices were down because I had confidence in the growth and the goodness of the company or the stock or the exchange traded fund where I bought more. So I was able to get more shares because the stock price was down. But now the stock price is starting to go up. And as it goes up and continues to go up, I am making more money because now I own more shares, right? So it says over time, this strategy could lower your average cost per share compared to what you would have paid if you bought your shares at once when they were more expensive than the average. Because let's say I remember when Nvidia was up to $120 a share and then it dropped down to $90 a share. So let's say you bought it at $120 a share, but then when it got down to $90, you got scared and you pulled all of your money out. Now you've lost $30, right? And then you're thinking maybe the stock price is going to go down. But then a week later, the stock is at $116. And now you're caught off guard. You don't know what to do. And then let's say a few days later, the stock goes up to $125 a share. And now you want to buy back into the stock. Now it's at $125. But remember, you bought it at 120. It dropped down to 90. You pulled your $90 out. You lost 30. And now that you're buying back into the market, you're buying back in at $125. So now you had to add onto that $90 that you pulled out, $35 more. However, if you had just left your money in there, it would have you've actually would have made $5 on that stock, right? So the benefits of dollar cost averaging, while potentially reducing your cost per share, is one compelling reason for for dollar cost averaging, there are other benefits to consider. It establishes good investing habit. That is so true. Even though you know you should be investing regularly, sometimes it's tempting to spend the money earmarked for investing on other things. If you set up regular automatic contributions, you're less likely to miss the money you invest, more likely to develop investing discipline, and more likely to stick to your plan. Like you can create an automatically withdrawn amount of money from your account each month to your investment account. Before doing so, I highly suggest that you create a budget. A budget is highly important. You cannot dollar cost average into the market if you're not budgeting how much money you can afford to invest. That's why I highly suggest you lower your debt to income ratio. You need to get out of debt, people. When you are in debt, you are a slave. You are a slave to whoever you owe money to. Like Dave Ramsey says, because this is where I got it from, because I never thought about it until he started saying it. And I was like, wow, that makes sense. You are a slave to the lender. Whoever you owe money to, you are a slave to them because you have to pay them back. You have to continue to work, make money in order to pay off that car loan, or in order to make that car payment, in order to pay your student loan. When you get out of college and you have that $60,000 in debt and Sallie Mae starts adding that interest, you're going to have to start working to pay that loan. You're going to have to work to pay off that credit card that you have debt built onto, right? And if you don't, it can ruin your financial situation. You won't be able to buy anything. You won't even be able to get an apartment in your name. You won't even be able to purchase a car because of the system that we've created, right? So either you learn how to play the game or you continue to get played because you just don't understand. You're just out there living your best life and not thinking, right? So you have to create a plan. Yeah. So the other thing to consider, or as far as another benefit of dollar cost averaging, it keeps you open to opportunity, market timing, trying to pinpoint precisely when the market will reach its peak or hit the bottom, and buying and selling accordingly. It is almost impossible. You will never be able to time the market. You will never be able to pinpoint the best time to buy and sell stocks. You won't. It's impossible. That's why I'm investing for the long haul, right? Even for professional investors, dollar cost averaging helps ensure that you'll be at the door when opportunity knocks. When the stock goes lower, you continue to buy. Then the stock goes higher, you continue to buy. It will continue to go higher. You continue to buy. It continues to go higher. You continue to buy. Then when it dips lower, you buy. And then when you buy, you will be able to buy more. Okay. Dollar cost averaging helps ensure that you'll be at the door when the opportunity knocks. Recent events offer an example as to why a steady investment strategy is so important. If you stopped investing leading up to the 2016 U.S. election results, when uncertainty drove markets downward, you may have regretted your decision in the days that followed when the market surged to record highs. That is so true. And so many people were distracted around that time with a certain narrative that was being put out by the media about, political parties and persons around, that 2016 era. And so much money was being made. So I think you need to understand and be aware of the propaganda, because a lot of the news outlets, when it comes to politics, religions, people, places, and things, it's emotionally driven information that makes you feel a certain type of way. And when you can tap into persons or people's feelings, you can keep their attention, whether it be good or bad news, mostly bad news. Mostly bad news. You can keep people's attention. And then when it comes to bad things, people just want to continue to know and learn more. They keep tuning in to, television, TV shows, so on and so forth, to, well, let's just say the news, to hear and learn more and more about these negative things about people, places, and things for whatever reason, right? But either way, but this right here says, if you had stopped investing leading up to the 2016 U.S. election result, you would have made a big mistake. Yeah, you could have made a lot of money. So minimizing regret, because you don't need to have any regret, right? Dollar cost averaging may also help prevent your emotions from undermining your portfolio. When you invest a large sum of money in a single trade, for example, you're more likely to feel regret if that trade turns out to be poorly timed. Behavioral economists noted that most people are inherently loss averse. They tend to react more strongly to losses, that is so true, on the prospect of them than to gains. But with dollar cost averaging, you're investing smaller sums of money over time. Like if you just placed a lot of money in the market at one time and it take a loss, you're going to be hurt. But when you become disciplined and you're investing month over month, no matter what the market is doing, when you're invested into good growth stocks, are just the S&P 500. Like I've said, the SPLGs of it all, the VOO from Vanguard, or VTSAX, which is the total stock market fund. And I actually have a book that was written by J.L. Collins that talks about VTSAX. But either way, when you invest over time, when you see losses, because you've been doing it over time, it's normal. It's normal for markets to correct itself to where, the value and the prices may go down. But because you're used to investing, you've been doing it for a long time, you understand that it's a part of the game. And then also being aware of all these reports that come out and how they may affect the market, it just keeps you going. So either way, but with dollar cost averaging, you're investing small amounts over time, making it easier to stomach a poorly timed investment. There's also anchoring bias, in which an investor may refuse to sell an investment bought at a historical high because he or she thinks it's still worth that value. By dollar cost averaging into a position, an investor may be less likely to cling to a single price anchor, making it easy to buy and sell according to a predetermined plan. So that's why you need to create a plan. And if you don't trust yourself in creating a plan, talk to a professional, financial advisor. Talk to a professional and have them make these decisions for you. You give them that certain amount of money each month to invest on your behalf. But just be aware, they're going to charge you for investing money because that's how they make money. Me, on the other hand, I'm not paying anybody. I created my own online brokerage account, and I invest my own money on a monthly basis. And that's it. But I'm going to end this video because I have to get off to work. So hopefully that information that I just provided you guys was helpful. If you have any questions, let me know. Like, comment, subscribe, share this video. Let me know what you think. If you think anything at all, but continue to mind your business, create a plan for your future, get into this money, because there's a lot of money being made and there's nothing stopping you from also making money but you. And the only reason why you're not doing it is because there's a lot of things that you do not know. How can you find out? Listen to this video or do your own research or ask someone who is a professional the questions. Closed mouths do not get fed, people, and no one's going to look after you like you. All right, so continue to mind your money business. You guys take care until the next time. Peace.